The success of our society proves that our system works, but maybe we forgot to teach our young folks that wealth is achieved by helping people to get what they want. So, if no one has yet taught you how the game is played in the big leagues, well, guess what? Now, it's your turn. Here's our rallying cry. There's a billionaire locked inside you. The key to freedom is information. The kind of information you find here on the MoneyMan Report. Now, here's today's host. Here's the MoneyMan. Here's Dan Frischberg.
Good morning, everybody. Welcome to the MoneyMan Report. Happy to have you with me. We've been on the road and have not been recording, and I'm honored and happy that a lot of people have said, where the heck are you? And we're looking for you. And so I'm going to make sure that we can keep this up steadily and that we're going to do a lot of these, at least a couple of shows a week. And so thank you very much for caring, and we're going to do our best to accommodate you. So the bottom line is, right now, there are billionaires making a fortune while most people are just sitting there and doing nothing and getting nowhere and accomplishing very little in their investments. And have you ever asked yourself why that's happening? Why is it? Why do the very rich people just keep making money and everybody else doesn't? So here's the answer. I'm going to answer. If everything you've learned in your life about finance is totally, totally wrong. You know, there are a big group of people who are eventually going to watch this video, maybe you're watching them right now, who are getting nowhere because they buy into this story that I call Wall Street lies. You see, a bunch of big-time brokerage firms, investment banks, got together about 40 years ago. I don't know if they all were in a room or if it happened de facto, but they told a story and they kept telling that same story. And essentially the story was, you're too dumb to have an actual strategy about how to make money by owning a company that does something important, or by owning a piece of it, or by having a very leveraged position in it. You're too dumb to pick out a company to have a position in. And they convinced people that nobody beats the S&P 500. Nobody beats the indexes. And so the only logical thing for you to do is to be completely diversified and own a tiny bit of everything. Of course, you don't make any money that way. You make a little bit of money. The S&P 500 has averaged about 7% a year. Now, remember, you're talking about, think about Warren Buffett. Warren Buffett started out, he started a furniture company, and people invested in the furniture company. He wasn't making any money, but he had an idea about what to do with the stock market. So he took some of the money he raised to make furniture, and he started buying these leveraged positions, warrants, long-term options on stocks. And if you have any question about the way he did it, think about this, because he went from just a guy that had a furniture company to one of the richest people in the world, hundreds of billions of dollars of net worth. You understand, if he was buying index funds and making 7% a year and putting, even if he put all of that money, even if he put hundreds of thousands of dollars into those index funds, it would take him thousands of years to get rich like he did. That isn't the way people that really want to make money invest. And, you know, the people who convinced the world. And when I say convince the world, they've been telling that story for so long about diversification and you can't beat the index, that now the teachers in college, the Finance One teachers believe this. And the moderators on TV shows believe it. And the radio hosts on financial radio believe it. And your financial planner, the guy that comes to sell you investments, he believes this stuff. And when everybody agrees on something, it becomes the truth. But it isn't true, because that's not the guys that spread that message, that spread that story, Goldman Sachs and Merrill Lynch and those guys. That's not what they do. What they do, that's what their broker, who sits in a cubicle and his job is to call strangers all day, and they've taught him to do that, to sell those mutual funds. But that's not what they do with their money. In the top of the Empire State Building or wherever they are, they've got really smart MBAs, finance people, who are really doing a lot of research and then buying into specific companies. And when somebody comes to them to raise money, you want to go public. So you come to them and they will help you raise a bunch of money, and they will make about 5% on that money. But the important thing is, as they issue that public stock, as they take you public, they issue warrants to themselves for a price a little higher than that stock went public at. But what happens is that now they have the upside. They didn't buy into the company, but they have those options, those long-term options, warrants, that allow them to own the upside on that company. And so as that company, which they took public, as it becomes worth more and more and more money, it's worth a fortune to them. That's how they make money. And they do it by picking specific companies, not by buying an index, because you can't have a strategy. They know which company they want to own, and they only want to own the companies they want to own. They don't want to own everything, because they can't really make any money at 6% a year growth. But you see, that clerk, that guy, that siding salesman who now works for Merrill Lynch or Smith Barney or one of those guys, or Goldman Sachs or Prudential Securities, that guy they want him to have hundreds of customers, and they want to have thousands of clients. So you can't buy that. They don't have millions of shares of these things that they're buying. There's no way that they can be in the business of teaching 1 million people how to buy that stuff. So what they do is they teach the 1 million people how to buy something that their salesman knows about, and which there's enough to go around. Because if they're buying warrants on a specific company like Uranium Energy, like I'm buying, because they know that that company is going to make a ton of money over the next several years, and that Uranium Energy was growing and paid off all its debt. That company, it bought Uranium One, one of the biggest uranium producers, but they already had some of the best uranium mines. But they weren't mining, you know why? Because the price of uranium was too low. So what they were doing was buying uranium out there on the spot market and then selling it. They were buying uranium and selling it. And just doing that was enough for them to pay off all their debt. Now they got no debt, but the price of uranium is running up. So now they're starting to really produce uranium, and they're going to make a fortune. And as you can see, with all of the fact that the world needs more energy, and the whole idea of green energy, and the fact that there's not enough gas and oil to go around, the world was kind of sour on generating nuclear energy. But now, even Germany has reversed it. They're building more nuclear plants. They're building them in Japan. They're building them in China. We've got a couple of them on the drawing board for the United States, but everybody's going to be doing more, because there's no pollution that comes out of it. And now they've got the technology down so that it's safe. And the bottom line is that that company, Uranium Energy, is going to make a fortune, and the stock is going to be much, much higher. And that's what smart people are buying. They're not buying one of everything because they're too stupid to know what to own. They're buying into companies that they know are going to be worth a lot more money. So that's one of the big Wall Street lies. And the other one is invest in what you know. That's another one of those lies that they've convinced everybody about. They quote the guy who was the founder of Fidelity Magellan, the manager of Fidelity Magellan, telling you, just invest in what you know. Well, he didn't invest in what he knew. What he did was he found out about what he wanted to invest in. And, we're talking about those brilliant MBAs in the top of the Empire State Building who are working for Goldman Sachs or Morgan Stanley or one of those guys. And they're investing in real stuff that big time bank wants to invest in. Not everything. They're investing in things that are going to make them a fortune. And that's what millionaires are doing. They're taking leveraged positions in specific companies that they know are going to make them a lot of money. They're doing that by buying long-term options, but also by buying the stock. So the bottom line is they don't invest in what they know. Imagine that girl who's the MBA, who's there at the top of the World Trade Center or something, investing their money, and they say to her, "What are you doing?" And she's saying, "Well, I'm investing in what I know." She's fired. What they got to do is she needs to do the research, find out what is important, what they want to invest in, what does big bank want to own. She needs to find out what that is and then learn everything about it, not invest in what she knows, know about what she needs to invest in. And that is what we have to do. Don't believe those lies. Those lies are keeping you down. Rich people don't believe that stuff. That what rich people do is they know that if they can own the right company, they can make a fortune. And if they can buy it with sufficient leverage, then they can really make a lot of money. They don't buy into those Wall Street lies. So how does a war like this and all this bad news make people money? How is it making me money? And how is it going to make you money? Because companies make money and the charts look bad at a time when everybody's worried and everybody's selling stocks. Why? Because as the old man taught me when I was hanging around the stock market when I was 13, 14 years old, as he was explaining to me, why do most people lose money? They lose money because they think the game is to guess what each other are going to do. That's the idea of looking at charts. Charts tell you what everybody else is doing. It doesn't tell you what's going to happen next. It tells you what has already happening. And if it keeps happening, if it keeps going the way it's been going, this is what it will look like next. Now, what is it about those charts that are attractive to people? Well, see, they don't want to waste the time. They don't want to spend the time. They don't know that they should be actually learning all about the company they want to invest in and then investing in that company and using the maximum amount of leverage. They don't know that. Nobody taught them that. They think that the idea is to find a pattern and guess what everybody else is going to do. So the poor people who follow each other and don't know what they're investing in, they follow the charts. Now, why do they make charts of pattern behavior? Because they believe that what happened in the past is giving them a chance to guess what's going to happen in the future. I got to ask you right now, think about this. Do people behave according to patterns? If you watch a pattern of somebody's behavior, does that tell you what they're going to do next? Because think about this. I've been married to a girl for 36 years who I know so well that we finish each other's sentences. Now, if watching patterns worked, wouldn't I know what she's going to do next? When she goes out, wouldn't I know where she's going? If what everybody else is doing isn't the game, what is the game? Well, 99% of the time, an asset is valued. Actually, not 99%, 100% of the time, eventually, assets, investment assets, are priced according to how much money they make for their owners. And that's true whether it's a mine or whether it is a rental property or an apartment complex or a stock. The value of it, now not in the short run, especially for stocks, because stocks fluctuate. Crazy people are buying them and selling them randomly. They're buying and selling them for technical reasons, buying and selling them because somebody sold it because he died. Somebody else sold it because they're getting married and they need the cash. Somebody sold it because they got to pay their taxes. Some very smart hedge fund operator wrote an article that got picked up and printed in a magazine. Why? Because he wants to fool you into selling so that he can actually buy the thing. There's a million reasons why stocks go up and down in the short run, and it's mostly random. It does not tell you what's going to happen over the next few years. What tells you what's going to happen over the next few years? How much money is that company going to make? So how do we make consistent money? Because we watch these assets and how much money they're making from year to year. If I want to know how my progress is, I'm looking at my progress from last year to this year to next year, not from week to week, not from month to month, definitely not from day to day. So, for example, the fertilizer story. Russia and the Ukraine are the biggest growers in Europe of wheat and grain. That's the breadbasket of Europe. Not only that, but Russia is the biggest manufacturer of fertilizers. And nitrogen fertilizer that they use to grow wheat and corn and that stuff, nitrogen fertilizer is made out of natural gas liquids. And that's something that Russia has had lots and lots and lots of. So Russia's been one of the big producers of fertilizer. But what's happening? They're not one of the big producers of fertilizer right now. And they don't really have anybody to sell it to. And the world needs food. And the price of wheat and grains are going up, doubling right now. Prices are high. Farmers are motivated to grow more. And especially since there's the production, the amount of farming that's going on in Russia and Ukraine is a lot less than normal, right? So farmers everywhere else have a tremendous incentive to grow wheat and corn and all those grains. In order to do that, they got to buy lots of fertilizer. And the product they're making, the grains, are doubling in price. So they're going to make a fortune. Now, they used to get a lot of that fertilizer from Russia. Now they're getting it from me. And they're going to get it from you if you're smart. Because I own CF, the fertilizer company that makes nitrogen fertilizer out of natural gas liquids, and Nutrien, who makes fertilizer, all kinds of fertilizers, nitrogen fertilizer, potash, potassium fertilizers, phosphorus fertilizers, to grow all kinds of stuff. And the bottom line is they're going to be buying this from me, and they're going to be buying it from you if you're smart. Now, if you check out what's going on the MoneyMan.com, you will find that we just finished having a really nice a really good workshop on buying into those things, on how to really make money, on impact investing, investing the way rich people invest, not the way poor people invest. A lot of people attended it. We're going to have another one in a week or so. And the way to find out about it is go check out themoneyman.com and keep listening to my podcast because I'll be announcing it. So we're going to stop for a break. And I want to talk to you about what's the general market situation right now. And then we'll be out of time. So stick around, taking a break, and we'll be right back. This is The Money Man.
Each week in his live video market and economy update offered to his inner circle, Dan Frischberg delivers the in-depth, professional version of his famous Market X-ray report, live and interactive. Now that means you get to ask all the questions you want. And if you can't make the live meeting, you can watch the report on demand. Then email your questions in and Dan will email the answers back or include them in the next live report. Week in and week out, Dan brings you the ideas and specific stock picks from his friends, the people you see on TV and read about in the papers. You'll see what they're buying, how they're hedging, and when they're taking money off the table. At last, you'll get to see how the insiders negotiate the institutional macro bonds that billionaires on Wall Street rely on, the ones almost everyone else never even heard of. When you become an Inner Circle member, Dan will share with you his lifetime of experience and guide you to the best teachers, the best stock pickers, the best option strategists. And you'll be invited to exclusive working vacations in beautiful locations for the Inner Circle only, where you'll rub elbows with some of the most famous investors on Wall Street. So, how do you value the lifetime of skill and experience of a top investor on a mission to share it all with you and help you become one of the few winners? If you've been listening to Dan for a few years, he's likely already made you tons of money, or even more important, saved you from losing a fortune. Now, there are limits to the capacity of the online video sessions, but right now, for a limited time, Dan's offering you the position of charter subscriber, get this, for less than the price of a cup of coffee a day. For all the info or to subscribe, just simply click on themoneyman.com. themoneyman.com.
You're tuned in to the Money Man Report with your host, TV and radio money man, Dan Frischberg. For more information about everything we're talking about, go to themoneyman.com right now. That's themoneyman.com.
So welcome back. And you know, the stock market's going down as I'm speaking. All the last month, all the last couple of months, it's been going down, down, down because people are worried about the news. People are concerned about what's going to happen next. And, you know, particularly afraid of war. And what if Russia actually escalates? What if they start using what if they start using poison gases, bioweapons? What if they start using tactical nuclear weapons? What's going to happen then? It's almost like the bombs are already in the air. So I want to tell you the story that one of the smartest guys, he is one of the top guys who runs the floor operations on the New York Stock Exchange for UBS. His name is Art Cashin. And he's been there for many, many years. And he used to come onto our radio program a lot. He's gotten very old now, and I don't know if he's still running those floor operations, but this is a story that he told me. He said when he was very young, there was a report that there was missiles with nuclear warheads that were in the air. And so he put in orders to sell everything. His mentor at UBS, one of the old veterans at UBS when he was young, said to him, "Hey, Art, you don't sell when the missiles are in the air. You buy when the missiles are in the air. Because if they actually land with nuclear warheads, your trade will never get done. So you buy when they're in the air, because if they don't land, you want to own the stuff. So I tell you that same story right now. Now, how do you get the courage to hang on? I know that we've been giving people a lot of good ideas, and then a lot of people tell me, you see, that they heard it, and a lot of people are telling me, boy, you've made me tons of money. But then some people tell me, I just lost a lot of money listening to you. This is the first time I ever lost money listening to you. But they're talking about doing something that they bought a couple of months ago. Yes, the market's down right now. I want to tell you about what it takes to really make money. This is the story of John Templeton. He was just a young man from Tennessee. And in the fall of 1939, Hitler's forces blasted into Poland, and the war was plunged into what became World War II. And this young man from a little town in Tennessee told his broker, buy $100 worth of every stock that's trading on any U.S. exchange for less than $1 a share. Buy me $100 worth of every stock that's trading in the United States for less than $1 a share. So his broker reported back and said, I've done it. I bought a little slither of every company under $1 that isn't bankrupt. Now, this young man said, no, I want them all. I want every last one. I don't care if they're bankrupt or not. And he ended up with 105 companies, and 34 of them were actually in bankruptcy. Now, that young man's name was John Templeton, and he was 26 years old, and he had to borrow the $10,000, which would be basically $200,000 today. And he had to borrow the 10 grand to finance that. Now, Templeton is not alive anymore. But here's what he said, and he was the mentor to some of the top investors today. He said, I regarded my own fear as a signal for how dire things were. He says, I wasn't sure they wouldn't get worse. In fact, they did get worse. But I was pretty sure that we were close to the maximum pessimism. And if civilization didn't survive, it wouldn't happen. But I don't think the Lord would allow that to happen. The following year, France fell. In 1941 came Pearl Harbor. In 1942, the Nazis were rolling across Russia, and Templeton held on. And finally, in 1944, after some of the most frightening years in modern history, he made a profit on 100 out of those 104 stocks. The war wasn't over. But actually, the most interesting thing is somehow the stock market knows when these things turn. The war wasn't over, but the stock market started rallying in the middle of 1944. And it turns out that it started rallying in the same week that turned out to be the turning point. Somehow, the stock market knows some of these things sometimes. But he made a profit on 100 out of those 105 stocks. He quadrupled his money, and he went on to become one of the most successful money managers of all times, the founder of the Templeton Funds. Now, what he says it takes to succeed are these 7 virtues, he says: curiosity, skepticism, don't believe everything you heard; discipline, once you've decided what you want to do, stick with it; independence, thinking independently; humility, knowing you don't know everything; humility, patience, and above all, courage, he said. Those are the 7 things it takes to make yourself rich. I concur. That is exactly. And I tell you, it's not so easy to have those things. But knowing about them makes you stick with it, makes you be disciplined. And for me, I've been at this for 60 years, and I know what has made me millions of dollars and when I've made mistakes. So I know exactly what to stick with. And I pass it on to you in every one of these podcasts, in every one of these YouTube videos. So I thank you all very much for being with me. And we will do another one very soon in the next couple of days, because we're going to consistently be putting these out here. So look for them. And do me a favor, do yourself a favor, and subscribe right now to our YouTube channel. Even if you're listening to this on Spotify, a lot of people tell me they love it much more when they watch it. So subscribe to our YouTube channel now and get notification. And also get notification when we're doing a special private workshop, private program, which we're going to be doing in the next week or so. And it's going to be about how to invest like rich people and not poor people. How to achieve big time leverage. So thank you very much, and we'll see you next time.
This has been Now It's Your Turn with the Money Man, Dan Frischberg. If today's program piqued your interest, there's a video link and QR code on this page for a free workshop that'll teach you a lot more. Or you can find it on Dan's website. Just look for themoneyman.com/golden rule investing. That's themoneyman.com/golden rule investing. Now, if you're only hearing the audio, everybody agrees it's much more exciting and easier to follow on video. There's nothing to it. Just go to YouTube and type in the Money Man Report. You'll see that QR code and the link right there for that free workshop. And by the way, if you subscribe, you'll be personally notified every time we produce a new video. So we'll see you next time. If you missed anything, all this info resides in one place where Dan Frischberg lives. The address is themoneyman.com. It's all one word, themoneyman.com.